Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday, and it's the 5th of January, 2022. My name is Russ. I'm a senior market specialist at FXCM. My email address is archer@fxcm.com, and I'm just going to go ahead and bring up the risk investment warning. We've got a live trade tomorrow for the non-farm payroll. I'm just putting that in the chat so you can register for that. Yeah, apologies that we haven't had any webinars this week. I've been working on the report. We've changed it from a quarterly to a half-yearly report, so I've been working on that, and I've just lightened it up a little bit. So that should be out towards the end of the month. All right, let's just bring up the commentaries disclaimer. Good morning, Anna. Good morning, Howard. Nice to have you guys on the webinar. Thanks everyone for joining. Just want to do the standard checks. Can you guys hear me, see me, and see the screen? Just let me know. If you don't have the link for the non-farm payroll, you can let me know as well. Our references: MarketScope 2.0 and TradingView.com. So we'll just go straight through to TradingView. And I don't think, hey Shadrach, okay, excellent. Hey Joachim, all right, excellent. Guys, I want to show you this. This is the DAS. This is a monthly, okay. So it's a long-term. We've gone all the way back to 1971 here. And I've got the COPOC indicator. And the COPOC indicator is generally it's one of my favorite indicators. It doesn't give signals all that often, but when it does, it's worth just paying attention. So if we go back to sort of 1974, turns up over here and turns up. It turns up over here, and then the DAX turns up over here. The DAX turns up. Remember, this is a monthly chart. This one over here is not the best signal. It actually drifts before moving up. This one, in 1988, crosses, and we get a beautiful movement up there. Crosses, moves up over here, and you can see over here as well. And over here as well. Okay, so you can see that these are really good signals in terms of the COPOC. Here is a whipsaw. Here's a whipsaw signal over here. Okay, so you can see that it turns up here this is the tech rack. There's a slight bounce and then it moves down. So this is something that we've got to be wary of, but then it turns up after that, and then it turns up again. This is now after the global financial crisis. Really beautiful signal there. Here's one again. Now this one's a bit of a weird signal because it goes into the COVID setup. So Kocha wipes out the signal. And then what we have here, let's zoom right in. What we have here is the latest signal. So as of December 2022, December has now closed, and it's giving us a signal. It's turned up, it's crossed the signal line, it's below zero. So we've got, let's just count all the whipsaws. Since we go back to 1971, there's 3 whipsaws that I can count. This one here, which is not a real whipsaw, this is a late signal. So it kind of gives us a signal, at the bottom, but then it takes a few months before we start moving up. Okay. Then we have the tech wreck. This is a whipsaw signal here. And then June 2019, I don't think is a whipsaw. This is because of COVID. It actually turned up quite nice. So I'm actually going to say extenuating circumstances made this into a whipsaw. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 signals. And of those, 3 are questionable. 10 out of 13 are really good signals. So that's a pretty good percentage. So you can see that we've got this this movement up here. Okay, and the question now that we've got to ask ourselves is, well, is this a good time to be looking at a bull market in the DAX? And if you listen to the pundits, and if you listen to the news, and if you listen to just about anybody, they're going to tell you that it's not a good time to be looking for a bull market. And that's probably precisely when you want to be contrarian. That's probably precisely when you want to start looking for opportunity. So the idea here is, okay, when the market is not responding to bad news. In other words, there's bad news abounding, but the market carries on going up. Well, that means it's probably a good time to be looking for evidence of a market bottom. So we want to just keep an eye on the fact that the COPA on the DAX has just crossed. Let's take a look at the Dow Jones. Is there an FXCM DAX chart? Yeah, it's called the German 30, GER 30. Let's go through to Dow Jones Industrials. Okay, let's bring that up. All right, and now let's bring in the zero long. All right, so similar XRs. Let's go back here. 1967. So there's a nice bull market there. Going to 1970, a nice bull market there. 75, beautiful bull market. Okay, coming to 79, it gives a signal at the bottom. It just takes some time before the market turns up, and that's confirmed in 1982. 1985, what a beautiful signal, right? 88 moves up. Okay, here's the whipsaw signal. It's similar to the DAX whipsaw signal that came through on the tech wreck. Okay, it takes some time, so we just got to be conscious of that. Okay, here's a beautiful signal here after the global financial crisis. All right, we've got a movement up here, and we've got a terrific movement up here as well. So only one real whipsaw out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 signals here. So 10 out of 11 are all pretty good signals, except maybe this one here where there's a slight delay. So you can see that the market here, let's zoom in, also starting to give a signal, isn't it? Not maybe a month behind DAX, maybe a month behind DAX. So we just want to maybe keep wait till the end of January, see if we get the crossover here. But the idea here is it seems to be ignoring bad news, and that's the big deal. It's ignoring bad news. Now, one market which I am quite interested in, I know it's not for everyone, but if we go through to the China 50, all right, so we've got a really nice movement up here on the China 50. Okay, so we've got a nice cross here on the China 50. And this is a market that's been beat since 2021. It's been absolutely beaten. But the idea here is you've got to ask yourself, are there bargains? Now, there is a higher risk profile when you're talking about the Chinese market. So there has to be some sort of risk premium that, so it's a high risk, high return type of thinking, but don't focus on the high return, focus on the high risk. Does this sort into your category of acceptable exposure in terms of risk? Secondly, the country is becoming a lot more autocratic, a lot more centralized, and that's going to have a problem. There's going to be an issue here with just information flow, general information flow. Transparency is going to be a problem here. So there's going to be a higher risk premium that's going to be required here. But we do have a beautiful crossover in the COPOC. Okay, so these are the sort of the three markets I wanted to look at this morning. Let's just bring up this chart here, which is a daily chart. So now we've zoomed right in. So we've got the real rate here, and you can see the real rate. The real rate has been climbing. And we've got the Dow Jones, which has been a phenomenal performer out of all of the risk markets. The Dow Jones has been really good. You can see that, just pull this down. You can see as the real rate has moved up, as the real rate has moved up, so there's been pressure on the Dow. Now, what's interesting to me here is that this is a potential flag. Okay, this is a potential flag. Now, this is a very contrarian view that I'm putting across, extremely contrarian, especially when you are considering the minutes that came out yesterday evening. The Fed minutes were very clear in that they see higher rates and that they don't see any cuts before 2024. However, this looks like a continuation pattern to the downside. Now, if this does turn out to be a continuation pattern to the downside, okay, then I think it's going to feed in nicely to the Dow. Guess what? That feeds in nicely with the fact that the COPOC indicators are starting to turn up. So we want to watch the real rates here. We don't want to blindly rely on the COPOC. That's not the appropriate way to use COPOC. We want to see if the rates in of themselves cooperate with the COPOC. Otherwise, we're going to get those whipsaw signals. And if we get the whipsaw signals, we don't want to be wrong-footed. So the idea here is to be very cognizant of the real rates, and we're going to carry on using them as we have over the last year. It's been very successful, and we're going to carry on using those. All right, let's just take a look at this chart here. We're going to get the DAX cash open. And let's just take a look how the DAX opens today. Okay, we're hanging, and the reason that we are hanging is because cash markets open. Let's go through to the hourly. Okay, so in the daily, zone 1, then take a look here. Okay, 1, 2, 2, 3. Okay, and now do we get a nice crossover here? So keep an eye on the center of its support. Okay, if it holds, we need to get a crossover on the EMAs. We'll need to get a crossover on the stochastic as well. And if we get the crossovers there, then of course we want to get a movement to 80 and hold. If we get a movement to 80 and it holds in that region, okay, get a nice swing. So let's keep an eye out for that. All right, that's where we're going to leave it for today. I shall put this on the website. I'm just going to do some editing just to cut out that middle part. If there's any questions, please go ahead and type those in. All right. Let's end it over here. Thank you very much for joining. I want to wish everyone a good day, a good evening ahead, and we shall speak again tomorrow. Remember, we've got the live trades tomorrow. Thanks, guys.